One of the most common complaints by traders is that I can't hold my trade long enough and it went to my target without me. Hi everyone, and welcome back to another simple daily practice drill that I think you can use to become a better trader. And this video is about swing trading. So let's check it out. All you need is your charting software and a fib tool, which has got 1/3, 50%, and 2/3. And I'm going to show you how I look through a couple of charts to find where the swings are. So here I've got a DAX chart. Let's say I'm trying to understand this day. Move from here all the way up to here. What I do is I pick up my fib tool, take the bottom of the range to the top of the range. What I'm trying to get an idea of, because everything on this chart is based on maths, I'm trying to learn what maths they're using. So the first thing I notice is that by dragging this top tick all the way down to the bottom of this leg, here was a buy signal. A trader was able to buy this bar. Probably you bought the close after 23 went above and came back down and tested it for a possible swing all the way up to there. It looked like other traders bought here, put a stop down here for a one-to-one trade. The fib tool I'm using is showing thirds and a 50%. And that way I can look at both one-to-ones and two-to-ones using the same fib. So there are two possible entries, that being the target. Let's take this fib down further. This is a very unclear open. We've got a gap down below the low of yesterday and we're overlapping. We're going sideways in a trading range. Here was a possible sell signal. It didn't even trigger down there. So the moment we go above that sell signal, there's probably some bears that are starting to get out. You can see on the bars 1, 2, 3, 4, 5, 6, 7, 8, 9. This is a 15-minute bull bar, and this is a 15-minute bull bar. So it's effectively like a double bottom or two reversals back into the range of yesterday. Because we couldn't see this part of the chart when we took the trade, we have to imagine that we're bulls. We're bullish on the day here. The bears tried and failed. They tried and failed once, twice, 3 times. They're probably going to give up. Now we've got a bull spike and a pullback. This is an inside bar and a buy signal. This is actually a kind of a high one. And interestingly enough, if this was the high one and you bought above that bar, here's a bull spike, here's a pullback inside bar, here's the high one, that was actually the one-to-one target. So we've got a strong high one, high two entry, 21.22 breaks above the high of 19, possible to use a stop there. Could you have used a stop down here? You'll notice I've then got to move my fib the other way. So I'm going to snap one and get rid of the other. And that creates a buy signal here for the swing up. Could you have used that as the stop? Yeah, I think that can also make sense. But I'm really more interested in finding swing targets. You can see here, if you bought the close of that 15-minute bar, because it's two 15-minute bull bars, there was your swing exit up there. If I've seen a bull spike, when 12 closed, it seemed to be a reasonable buy. I can also see there's a tick gap there, which means the moment 12 closed, there was an enormous amount of orders to get long. Some traders were able to get long. Other traders got a chance on the pullback. I often look at where these tails land because they can set up 2-to-1 moves. Okay, so that's on the long side. Now we're going to repeat the exercise on the short side. I'm going to take the top of this range all the way to the bottom. So the way I've set my fib up, I've got a 0, depending on the software that you use. So I'm essentially moving the 0 and the 1, and then it's taking the other numbers around. You might set it up differently. So if I put the stop there and the target there, it's not very obvious what traders entered. If I'm short, I should put the stop above a bear bar. Now, it's not very clear. Do you sell below 45? Maybe. Maybe you sell below 45 once 46 is weak, looking for an exit down here. Here is a double bottom, and we've broken below that double bottom. But this bar didn't close below that double bottom, even though it broke it. So let's ignore that for the now. What about using this high? We've broken below, so the stop for the bears is probably above that bar. Now we've got a spike down, a pullback, and a low one sell. So that's a low one sell. I'll put it on the chart. I'm more interested in swings, but I'm starting to get an idea of what's been happening on this day. How could a bear have gotten 2-to-1? This is more interesting. Now, Traders are selling in the top third of this trading range. Stop up there. So now the more that I'm doing this, I'm developing ways to see how swing traders are using the price action. Don't overthink it. Here's a strong signal bar. We've broken below the moving average. We've broken below a double bottom. You sell, and the bulls don't get any good reversal until you get one-to-one profit. Then it immediately goes to your 2R profit. What about on the way up? Stop below the low of the day. So I'm putting the fib down here, target there, buying above 66 and holding for 2R. So a double bottom attempt on a trading range day, lowest tick of the day. Bears could put a stop up here. Here is a breakout and we never came back. This bar was never challenged. For traders sold below 47, they've had no reason to exit that trade. For traders sell somewhere in here, they've now got a 2-to-1 swing down there. First, take my fib and put it from the bottom tick to the top tick. So the first thing I notice is it's a huge bull bar. So now I'm placing the 1-to-1 target there. If that's really going to be a measured move for traders, then that's going to take us all the way up there. What about if you entered on the follow through? Well, isn't that interesting? If you bought that follow through bar and put a stop below, your 2-to-1 target was up there as well. So part of the practice is looking to see what traders did. This is working out why they did what they did. I often look for small bars in the highs and lows of trading ranges. Here is a breakout and a pullback, spike pullback. This is a channel. This is a gap. And you can see a very small bull bar right in the lower third. If a trader bought here, betting that gap is going to stay open and that 23 was not going to be the high of the day, traders buying anywhere in here were taking a chance we'd take out that bar. So that was another 2-to-1 target. What if you use the 20 low as your stop location? And then I move my fib up to the top of the range and I'm looking to see what happened. Often I will just find where there's a big overlapping area. I think that's an easier way to find targets. And then you can see that was another way to participate in a swing. Friday was quite an interesting day. So let's see if we can work it out. Buying above the first 15-minute bar gave you 2R. Buying above that second 15-minute bar was also a good swing. I took that swing when I was in the room. You've got consecutive bull bars after a gap up, so I think that's a reasonable place to try and get a swing trade. Well, once again, I take the fib to the whole range. I also managed to take this swing on that Friday. This is a parabolic wedge top. You expect 2 legs sideways, but the probability is high that this will turn into a trading range and not do this on the first attempt. So buying here with a stop there. My target was not actually all the way up there, so I didn't quite get the full 2R. I think I got 1.5R. I added on in here, so from an actual risk perspective, it's okay, but I'm pretty comfortable with how the pattern played out. But that was actually a miss. Now you've got a giant range. What do I notice about this big range? Well, where is the green line? The green line is the 1-to-1. So traders were deciding right here, is this going to reverse up and close the gap? Or is this whole spike going to get a measured move down? Starting with a big spike is a reasonable place to do it. But where was the swing? Well, if you look at it this way, that was the range of the day, and that whole range broke out for a swing. So actually traders were selling below the low of the day, a potential 2-to-1 swing. So that's interesting. How else could you have done it? Look at the tight trading range here. So I'll take my fib from this spot up, 3 consecutive bear bars. Now the chance of a second leg is probably 70%. So now you've got a chance to take an entry, take some off, so you scalp out and swing the rest. And what you'll notice is there were a couple of possible swing entries there. And you don't know which ones are going to work. You just do your best to take some of them. You can also take the range of a pullback and project that down. So traders sell somewhere in here. All pullbacks are trading ranges on a smaller time frame. So traders selling below there get a big surprise to their entry. They exit 2-to-1. You can do this on any chart, and I highly recommend you practice it because it's going to get you open to the idea that your trades can go much further than you think. And even in a few of the exercises that we did today, you can see a lot of similarities. I instantly look at this chart, and that's the first thing I see. So by training this drill, why would someone buy in the lower third of the trading range? Well, there's a really good chance they're going to get up to the top third of that trading range. That's 1-to-1. But there's also a chance they can get all the way up to their 2-to-1 target. There's a variety of reasons, a couple of failed breakouts, but the main reason is someone who's selling here has a very wide stop and a small target, and I have a very small stop and a big target. It still only has a 40% hit rate, but that's all you need to be successful. Well, thanks very much for watching. I hope you found that valuable. In this video, I discussed a practical technique that you can use to improve your swing trading. The more you practice this, the more comfortable you will become in swinging some of your contracts. My name's Tim Fairweather. Thanks very much for watching, and I'll see you in the next video.